Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the S&P 500 that is just relentless. It has been relentless over the past few weeks. This is just an incredible rally that we're seeing. We had this massive breakout, backtest, resumption of this longer term trend line. These are just massive developments, massive moves taking place. If you compare this rally to anything that we've seen throughout history, these are just incredible moves that we've seen from that March low in 2020 and what we're continuing to see throughout 2021. And that's what I quickly want to talk about here. I want to talk about what's happening here and whether the market is behaving like a stock market bubble. This is an idea that we've talked about many times before on this channel. We've covered some of the indicators that we use to help us identify whether we're currently in a full stock market bubble. So that's what we're going to begin with in this video. If you are new here, make sure to smash that subscribe button if you haven't already. We make these videos multiple times a week to help you navigate through these crazy markets. So now without further ado, let's get right into it. All right, so this is a weekly chart of the S&P 500. I've added a 40-week moving average on this chart, which is the equivalent of the 100-day moving average if you're on a daily chart. The reason I want to show you this is because this moving average is one of the most widely used moving averages. So it's definitely an indicator that market participants are following. Now you can see where it is, where we're currently at. Price is currently very far from that 40-week moving average here. And that's the first thing that I want to talk about, which is one of the indicators that we use to judge whether stocks are in a bubble or not. And that is this indicator right here, which measures the percentage difference between the price and the 40-week moving average. So from a technical analysis standpoint, if you've been following this channel, you'll know we like to keep things simple. And so this is one of the very simple ways to measure how overextended a market is. So you can see here back in April 2021, after this rally, as we were breaking out above this bull market trend line here, we saw a large gap between price and this moving average here. And we got to this reading of 12.49. I've put a horizontal line here so that you can see how many times over the past 10 years we've hit this level of overextension. And the answer is none. So that's perhaps one of the first warning signs that you want to see, is that the market is no longer behaving like it used to. Right? This was a normal, healthy bull market trading within its nice bull market price channel. But all of a sudden, it's no longer trading within its bull market price channel. And it's printing readings of overextension that we haven't seen in 20 years. Right? And if we go back 20 years, where does that take us? That takes us down to the dot-com bubble right here, where we got these levels of overextension back in 97, in 98, and 99. So this is definitely not a healthy market when you can compare the technicals to what was happening in 1997. And that's something that we've been doing for quite some time. We've been calling for this market to enter bubble territory for a long time. And that's exactly what's happening right now. We've compared 2020 to 1997 many times, and it seems like that's where the markets want to go. Now, that doesn't mean that the markets are going to top next week. Absolutely not. Right? Look at 1997. We had this overextension reading, and obviously in the 3 years following that reading, the markets were up significantly, right? Especially the tech sector that was just melting up massively here. So the markets can remain irrational and overextended a lot longer than you think is possible. Now, if you have any comments, any questions or suggestions, make sure to leave them down below. I do go through and read all the comments. I think having an open-minded debate about all these developments is the best possible way to get down to the truth of what is actually going to be happening. And also, if you enjoy this video, make sure to smash the like button. It helps our channel out massively. It is really appreciated. I want to show you another indicator that's beginning to flash red in terms of bubble territory, and that is the AAII bull survey. So this is probably the best way to get the market sentiment. It's a survey that a large number of investors complete on whether they expect the markets to be up or down 6 months from now. This chart here, this blue line, shows you the number of bulls that we have in the markets according to this survey. I'm going to zoom in a little bit to what's happening here. You can see since November 2020, where we had that vaccine news, that was the first spike in bullish sentiment that we got. We got another one back here in April 2021, so very recently, and we're starting to see bullish sentiment come back up above that 50% level, right? Above 50% of investors that are bullish is usually seen as excess optimism. It's too much bullish sentiment, and that's usually a sign of an overextended market, right? Again, if we look back over the past 10 years in this quote unquote normal, healthy market, you get a bullish sentiment spike here, then you get a period of consolidation and then a drop. If we fast forward a little bit further into 2014, again, you get a spike here, then following that spike, the markets consolidate and then make a couple of drops. Here in 2018, you had a nice blow off top, which was accompanied by a spike and then a period of consolidation. So that's what usually happens when you get excessive bullish sentiment, except what we're seeing right now. 1, 2, perhaps a third spike with no correction. Again, that doesn't mean that the markets are going to be entering a bear market anytime soon. On the contrary, it's telling you there's a change in character. The price of the S&P 500 is no longer reacting the same way to an excessive bullish sentiment environment compared to how it was reacting back in this area here between 2008 and 2020. Now, again, if we zoom out on this chart and we take a look at what periods look similar to this, you can make the argument that this looked a lot like what we're seeing here, except that in 2003, that was the bottom of a bear market. Right now, the stock market is at all-time highs. After a 50% drawdown back between 2000 and 2003, it's normal that investors began to expect higher highs. What does look a little bit more similar to what we're seeing right now is, of course, this period right here between 1997 again and 2000, where you had multiple spikes of bullish sentiment, and yet the markets continued higher as if they were not happening. So obviously everyone has their own opinion on where the markets are going to go. And our opinion is that this is not a healthy market, right? The higher the markets go up right now, the lower the expected returns of the S&P 500 are going to be in the next 10 years, right? So if we head into a massive margin debt fueled bubble and we continue to see these parabolic moves week after week, the expected returns of the S&P 500 diminish massively. So this is definitely a trader's market where you can look for objective long opportunities where the markets just seem to never stop going up. That's the trade to make right now. You have to be bullish on the S&P 500. We haven't looked for shorting opportunities since around here, right? Because this period was where we could have seen the beginning of a bear market. If this rally had played out as a bull trap scenario, that could have been a beautiful short opportunity right here. But ever since this breakout right there, the number one trade to have on the S&P 500 has been up. Now go and check out our website at gameoftrades.net if you want to follow the markets with us throughout the week, whether that's the stock market, cryptocurrencies, precious metals. We cover precious metals a lot. There's going to be a lot of big opportunities in gold and silver. So make sure to go and test out our service on gameoftrades.net.